Hello everyone, in this presentation, I will discuss the economic issues posed by consumption taxes, tariff, and VAT taxes. First of all, I would like to talk about how consumption tax affect the welfare of consumers and the producers. Consumption tax has a broad impact on the welfare of consumers and producers. First, consumption taxes cause commodity prices to rise, which makes consumers pay higher prices for everyday goods and services. This price increase reduces consumers' purchasing power, thereby reducing their welfare. At the same time, producers are also affected, as high prices may lead to lower demand, thus reducing sales volume and profits. However, due to the failure of market resources to be allocated in the most efficient manner due to consumption tax, market transaction volume is lower than the optimal level, resulting in deadweight losses. Therefore, consumption tax not only leads to a reduction in the welfare of consumers and producers, but also distorts markets resource allocation, introduces deadweight losses, and makes the resource utilization of the entire society inefficient. While import taxes are also known as tariffs, are taxes levied by a country's government on goods or services imported from other countries. Import taxes often result in higher prices for imported goods, which can result in consumers paying higher prices when purchasing those goods. Therefore, demand may be somewhat suppressed, and import taxes makes imported goods more expensive, which may make domestic manufacturers more competitive because their products are relatively cheaper. This could incentivize domestic production and manufacturing. Let's now talk about the difference between deadweight loss caused by import tax and consumption tax. Import taxes are based on the value of the goods and are usually paid by the importer. Deadweight loss of import taxes represents the reduction of imported goods due to rising prices, usually in the international market. The deadweight loss of consumption tax mainly involves in domestic market. It will lead to an increase in commodity prices, affect consumers' purchasing decisions, and may lead to a certain degree of decline in commodity demand. Both deadweight losses represent the reduction in resource allocation efficiency in the market caused by the tax policies. And consumption tax causes an increase in the price of goods because it increases the selling prices of the goods, which may cause a decrease in aggregate demand as consumers pay more when purchasing goods and services. Imposing a consumption tax increases the total cost of purchasing goods and services for consumers, resulting in a reduction in disposable income. This in turn reduces consumer spending. As a result, the aggregate demand curve shifts to the left, causing aggregate demand for goods and services to decrease. Consumption taxes also affect the aggregate supply. Although their impact is generally smaller than their impact on aggregate demand, a consumption tax may be affected by supply-side factors such as labor force participation and saving rates, but this effect tends to be less direct than the direct effect on aggregate demand. Overall, consumption taxes are likely to have a negative impact on aggregate demand in the short term, leading to market imbalances and efficiency losses. Taxing unhealthy products may lead to the improved public health outcomes. Fewer people consuming these products could lead to lower rates of health problems such as obesity, diabetes, and heart diseases. This in turn can reduce healthcare spending in the long run. Lower medical costs may lead to an increase in disposable income, thereby boosting consumer spending, shifting the aggregate demand curve to the right. 81 is the initial aggregate demand curve, and 82 is an increase in aggregate demand due to a decrease in medical expenses. Improving the health of the population can lead to a healthier and more productive workforce. Healthier people are more likely to participate in the labor force, be absent from work less often, and be more productive at work. This may result in an increase in the long-run aggregate supply. LRAS1 in the figure is the initial long-term aggregate supply curve. LRAS2 represents the long-run aggregate supply shifting to the right due to increases in labor productivity. Finally, let's talk about the impact of a fat tax on health and economic growth. The directed acyclic graph (DAG) is an effective visualization tool for representing cause and effect relationships. When assessing the impact of a fat tax on health and economic growth, the DAG diagram can be used to briefly represent the key cause and effect relationships in the study. In this DAG graph, in this DAG diagrams, arrows represent the direction of cause and effect. Fat tax may affect health because it reduces people's consumption of unhealthy foods, thereby improving health outcomes. Health status, such as people's weight and prevalence of diseases, may further affect economic growth, as a healthier population may be more productive and reduce healthcare expenditures, which may have a positive impact on economic growth. In fact, there will be more other factors that affect economic growth. But what we are discussing now is the impact of the fat tax, so it is not shown on the graph. At the same time, both fat tax and health may be affected by confounders, such as people's eating habits and exercise levels. These factors can also be connected by arrows, but for simplicity, they are represented in the diagram as other factors. Thanks for your guest listening. Bye.